Have you ever wondered how businesses keep track of every single rupee they earn or spend, or how you know if you are in profit or loss? The answer is accounting, and in today's video, I will explain accounting in the simplest way possible. So, what exactly is accounting? Accounting is the process of recording, summarizing, and reporting financial transactions to understand the financial position of a person or business. So, in summary, you know that accounting tells where your money comes from and where it goes and how or whether you are making profit or loss from that transactions in your company or not. So basically it is a financial transactions. It helps us to know whether we are making profit or not from the assets we own or from the resources we are consuming in the organization or in the company. So now here is a another important point of accounting, that is importance of accounting. So there are three points that you should know. And so first of all is accounting helps you to track your income and expenses. So it helps you to record your income, revenues, and the expenses where you have spent the money. And without it, you will never know if you are saving or overspending. So if you keep record of everything, then you will know how, where, and how you are spending it, or if you are saving it or not. So second point is it helps you make better financial decisions. For example, if you record everything, every transactions you are doing in the company, or every purchases you make, so from looking at that, from doing analysis, you know whether to invest or cut cost or expand your business. So it is helpful for you to make financial decisions in your company. And third one is accounting is required for taxes and legal purposes. From accounting, from financial statements, you will know that how much profit and loss is profit is made. From that, governments, banks, and investors will become interested in your company. So from looking at the income statement, government will know how much tax should they collect from your company, or if you are paying proper tax to the government or not according to your profit. And investors will invest in your company the money by looking at the how much profit are you making in a year, and how much dividend you are paying to the investors. So this much about importance of accounting. So who are the users of accounting? There are many users of accounting, like internal users and the external users, but now just focus on four main users of the accounting, that are business owners, investors, government, and employees. Even employees are also the users of accounting. So, why business owners need accounting? Business owners need accounting to check if there is profit or not, what they have invested in the company, if they have get dividend or not in the return. So for in future, if in future they decide by looking at the profit income statement whether to invest in this company anymore or not. So if talking about investors, investors are concerned in accounting, because so by accounting they know if if that company is worth investing in. It means that by looking at the financial statements, by looking at profit and loss account, you will investors will know if they have to invest in this company in the futures, or if they are having any profit from that. And talking about government, so government are interested in your company because they want taxes from your company. So how much profit you make, so according to that you have to pay taxes to the government. And even employees of the organization of the company are interested in the accounting, because to know whether the company is stable or not, if they will get fired, if they lose their job, if company is going in loss, if it or if it is experiencing loss. And here are some basic terms that we should know in accounting, that are assets, liabilities, capital, revenue. So assets is what you own. For example, like for if you talk about you, it means like what you have, what do you purchased from your money. Like it can be your laptop, your house, your car, and for the company it can be machinery, equipment, building, and what it has, what it owns. And talking about liabilities means what you owe. Example, a bank loan. If you purchase something in credit and you have to pay it back to a supplier, that is also your liabilities to pay back to the suppliers. And another is capital. Capital is basically the owner's investment in the business, like investors who invest in our companies, our shareholders who invest in our companies. So the invested money is the capital of the company. And another is revenue. So the revenue is the money you earn by selling or by getting any commissions, by just doing giving any services to the customers. What you earn is your revenue. So here is example, that is salary and sales. So at the last, accounting is nothing that complicated, but is the language of business which trackers, summarizes, and it last reports the financial transactions to the investors, shareholders, and the business owners. And it is important for us or for the company to make decisions like and to pay taxes and know whether the company's financial health is stable or not, whether they are having profit or not. And so we also learned some basic terms like assets, liabilities, revenues, and expenses. And so thank you. If you found this video helpful, make sure to like, share, and subscribe. In my next video, I will explain the golden rules of accounting, the foundation of every journal entry. Trust me, you don't want to miss it. Thank you.